What is going on, guys? Welcome back to Trading Learning 101. Today I want to do a little quick and technical analysis video on ticker symbol AIM, A-I-M. We're going to break down what it did on this specific day and my thinking process behind this technical analysis. Let's jump into the video, everybody. First up, we're going to look on FinViz to see what the float is, the shares outstanding, the short percentage. Right here, the shares outstanding is 24.2 million. The float is at 7.7 million shares. Anytime you got a stock where the float is under 10 million, that's a low float stock. When it's under 5 million, that's a really low float stock. And when you got a stock under 1 million shares float, that's a nano float stock. Whenever you have a low float stock gapping up early pre-market, you always want to add it to your watch list and keep an eye on it. See if it has news. What's the catalyst that has it gapping up? Is there a chat room out there pumping the stock? And get on Twitter to see what people are saying about that specific stock. So for this instance, AIM had a real big gap up on Monday, March 9th, 2020. It's a low float. And the last thing I want to look at is the short float. Short the float is at 13%. It's not high, but it's enough. Almost quarter of the float is short. When you got a stock like this gapping up as much as it is, and you got 13% of the float short, all those people who are short are now going to have to cover their positions, which equal in more buying, and you have buyers like me and you entering into it as well. I call it a double whammy for the stock to just shoot up in price. Next, we're going to look at the news. What had AIM gapping up on Monday? Well, on March 9th, they put out news that their drug to be tested as potential coronavirus treatment. Right now, with the market cycle in early 2020, we're seeing a lot of pharmaceutical stocks pop up and have really big runs, all from this coronavirus. All these pharmaceuticals are putting out press releases that they're starting and working on treatments and vaccines around the coronavirus. And we've been seeing really big runs. AIM is just one of them. We have CODX running from pretty much $1 up to $20. APT running from $4 up to $42. AHPI running from $2 up to $44. NNVC running from $3 up to $18. NVAX going from $4 up to $17. So you see, from all of these pharmaceutical stocks that I've just brought up, this is a really hot sector, the healthcare. And AIM, let's go back to AIM. AIM is another one of those healthcare biotechnology sectors that's just been on a really big run. What's interesting with AIM, with a lot of our stocks that I've just mentioned, they're all listed on the NASDAQ. AIM is listed on the American Stock Exchange, and it's in the biotech industry. When you got the New York Stock Exchange, the NASDAQ, the American Stock Exchange, they're all gonna move differently. So you have to know what stock your exchange is on, because they all trade differently. Now let's pull up the daily real quickly here on AIM. I have all of my moving averages plotted out, and for me, I like to use the 300-day moving average, this purple line right here. And this 300-day moving average is right at $4. And that $4 is going to be a big level when we look at the intraday chart. The following moving averages that I like to plot on my daily is the 50-day moving average, 100-day moving average, the 200-day moving average, and the 300-day moving average. And again, remember, this 300-day moving average is right at $4. Here's what AIM did the whole week from Monday to Friday. It had that really big day on Monday, and then the rest of the week it went sideways, and then at the very end, Thursday and Friday, that's when it just faded off and crashed. Now if we zoom in here, Monday right here, you could see pre-market right here, this gray shaded area, all right here. This was pre-market. Stocks gapping up from $2 up to a high of $4 pre-market. Now let's get into when the market opened. Now Monday, March 9th, the whole stock market halted. The whole stock market had a volatility halt. Once you have a main index like the S&P 500 drop 7%, it will trigger a volatility halt. The next level will be 13%, and then at 22%, they'll close down trading for the whole entire current day. On Monday, right here, we had that volatility halt where the whole stock market halted with the volatility. Then after that, with AIM went from $3 and surged all the way up to $4, where that 300-day moving average was. $4 is acting as that resistance. So we can draw our resistance line right there at $4, and then you could see AIM retrace all the way down to 330s and 320s. It made lower highs. We got our support all right here at 325. This is what I would call an ascending wedge right here. And then it starts to break up from that ascending wedge, pulls back, and this orange line is the VWAP, the volume weighted average price. You can see once it popped up from that ascending wedge, it pulled back right here and held right at VWAP. And from 350, this stock grinds all the way up to $4, breaks through it right here, breaks right through it, and when it pulled back, $4 now was holding as support, showing strength. Old resistance should hold as support, and that's what it demonstrated right there. And this is why I'm a fan of looking at candlestick charts. You gotta pay attention to detail when you're looking at candlestick charts. We broke over that $4 resistance right there, and with this candle right there, it held as support. And from there, from $4 right there, we grinded all the way up to $4.75. And then we got a quick little pullback right here, consolidation. And this is what I would like to call the supernova parabolic move with the low float stock right here. Take pictures of stock charts. Always put a little note at the top of the chart or something, like right here, and always say what the float is. So for AIM right here, I'll put float 7 million, and then I'll take a screenshot of the chart and then go through and look at all of these charts, and you'll start to see the same thing. If a stock makes a pattern like it did right here and breaks to the upside, watch, it'll have that break to the upside, it'll have its little consolidation, and then it'll have its big supernova parabolic move to the upside like it did right here, from 475 all the way up to 650 right there. And then there's another thing I want to point out with AIM, and this is going back to what I was saying. You always want to pay attention to detail with charts. Now remember this area right here where it consolidated at before it had its big parabolic move up. After it made that move up, and when this stock pulled all the way back down, look at the area where it was bouncing at right here and right here, right at resistance right here when it had the consolidation period. That's what you want to look for support. And you can also get into drawing Fibonacci retracements. I'll throw a Fibonacci retracement from the swing low of down here all the way up to the high, and when we do that, look at right at $5 here, it's the 50% retracement. That's where the stock bounced, all right here. And from $5, this had a nice bounce a few times right up to $5.75. So from here up to here with a range of 75 cents, there was an opportunity to buy right there, sell there, buy there, sell there. Once we broke through this resistance right here, the stock pulled back and held as support right there. When it held as support, showing strength, it had a little bounce up, held again right here, and then made a new high of day at $7 from $6. Came all the way back down to that level, bounced again right there, right back up to high, and then it came and tested it right there and fell through right here, but reclaimed it, had a nice little surge back up, and then going into the close, that support was still holding right there. That's how you break down and read charts. You take it level by level at a time. Going into after hours, stock ran all the way up to $8.75. Another $2.75 to the upside here from that $6 level. And then the next day comes. We'll fast forward to the next day. And this is where it really gets ugly here. Look at that. Opens up at $5.30. Drops down, runs into a halt. And all of these areas here where you see the dotted lines, all right here. This is all where the stock got halted. All of these areas. And look at that, from 5.30 when it opened up right there, this dropped all the way down to $3.70. But it also made another pattern right here. It bottomed out here. It could not drop lower than $3.70. Connect all the lower highs here. That's a wedge. And from 370, this surged up to 420, broke over VWAP, and ran all the way up to $5.80. And from that, this stock just trended all the way back down to $4. And that's what it did the rest of the day there on Tuesday. Fast forward over to Wednesday. Wednesday from the open, this was just surging from 4 all the way up to 5. And then from that, trended down and then just went sideways in a range the rest of the day. Going to Thursday, a lot of nothingness. And Thursday, we ran into another stock market halt where the whole stock market halted for 15 minutes. So 2 stock market wide halts in the same week. That's the first time that's ever happened in the history of the stock market. Happened again here on Thursday. And then on Friday, we'll fast forward it to here. A lot of nothingness going on here as AIM dropped down to $2.60. So if we zoom right back out on this, all people really pretty much did with this, played the news on the first day right here when it came out, and then after that, everybody made their money, made all their profit, all right here and all up into here. And then after that, people just kept selling it all for taking their profit as the stock was going down. You know, it's Monday. Throughout the week, other stuff pops up in the stock markets. Other stocks put out press releases. You have to think of volume as if it's the mob. Every single day, they're going to be moving on to whatever's new and whatever people are attracted to with the volume and the news. Every single day, it's going to be a different stock. AIM was Monday's hot stock. Tuesday could have been CODX's day. Like I said, every day it's going to be a different stock. And as a day trader, you can't emotionally marry a stock. That's why I always say too, with small cap stocks, and when you're looking at stocks under $5 or $1, it's really hard to be a swing trader on those types of stocks, because you got to get into reading SEC filings, knowing if you're holding a swing position for a few days or a week or a couple weeks, that the company's not going to come out and put out warrants or shelf offerings, at the market offerings, stuff like that to protect you. Majority of the time, all of these small cap stocks, penny stocks, are pieces of crap companies. They're all just starting out. Whenever they get a good spike, you best believe they're going to take that money and run, because you got to think they're all brand new companies trying to grow. So whenever they get a good spike, increases their value, they're going to do whatever they can to take that money and try to reinvest it back into the company to grow even more. And then the last time frame I want to look at on AIM is the 10-minute chart. And I highly recommend always look at multiple time frames. Always. For me, I like looking at 1-minute charts, 3-minute charts, 10-minute charts, the daily, weekly, and monthly. There was opportunity on AIM after it had its big run up right here. You see right at 350 held as support right here and right here, and it had two nice pops up to $5 right here and right there. You can see on the volume profile there was a lot of volume right there and a lot of volume right here. Support right there, resistance right there. And then it just slowly faded off and fell all the way down. It's pretty much done for. But I like doing these technical analysis videos to show you guys my thinking process and how I break down charts and how I like to look at charts. I just started experimenting with messing around with Fibonacci exponential moving averages. The ones that I have plotted on this chart, the blue one is the 8 exponential moving average, and the red line is the 34 exponential moving average. And I'm really liking these moving averages plotted on my bigger time frames. 10-minute, 15-minute, 30-minute charts. If you guys have any comments or questions, leave them in the comments section down below of this video. If you enjoyed this video, hit that like button. If you're new, subscribe to the channel where we all grow as traders and investors. And until next time, everybody, have that patience, have that discipline, and study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you agree?